Hello and welcome to 5-Year Club video number 341. Since it's the end of the year and it's also a charitable season, I thought that tonight I would go over the rules for charitable donations. Specifically, not donating cash, but donating non-cash items in there. It's a good time to clean out stuff, and if you're going to donate it, then you might as well take the deduction. No reason to give that away. All right, so the first article is from a website called Discover. Yeah, I guess it's like the Discover card website. And, I'm just looking for basics here. So, yeah, so I don't think it's a big deal. Which website I pick? Okay, so number 1, writing off charitable donations only works for qualified organizations, right? So obviously you need to make sure that it's a 501c3 or whatever. To claim a tax deduction for your charitable gifts, the organization you're donating to has to have the seal of approval from the Internal Revenue Service. Essentially, it has to be an eligible organization with tax-exempt status. That includes churches, mosques, synagogues, temples, and other religious organizations. Charitable organizations like Goodwill, the Salvation Army, and the American Red Cross and the United Way, nonprofit schools, hospitals, and volunteer fire departments, veterans groups, and certain cultural organizations, public parks, and recreation facilities. Note that this list does not include political organizations. If you're not sure whether a charity or nonprofit qualifies, you can use the Exempt Organizations Select Check tool to verify that they are eligible. Number 2, you need a paper trail. Some charitable donations are tax deductible, and, just as with any other deduction, you'll need proof to back it up in case the IRS decides to take a closer look at your tax return. If you're interested in writing off charitable donations, don't forget to get a receipt from the organization you're donating to. The receipt should include the name of the organization, the amount you're donating, a description of the items donated, if you're donating things like books, toys, clothes, or household items, a statement saying whether any goods or services were received by you in exchange for the donation, and a description and good faith estimate of the value of any goods or services received in return for the contribution. If the goods or services received consisted entirely of intangible religious benefits, the statement should say that. That last one is especially important. The IRS only allows you to deduct donations less any value you received in return. If you donate $500 to your local arts organization, for example, and they give you 2 free tickets to a concert that have a value of $100, you'd only be able to deduct $400 of the donation. You have to itemize to write off charitable donations. Certain tax deductions can be claimed regardless of whether you itemize or claim the standard deduction. When it comes to charitable donations, however, you can only snag this tax break if you itemize your deduction expenses on Schedule A. And just how much you can deduct on Schedule A, and just how much can you deduct on Schedule A for charitable giving. Currently, in general, the IRS allows you to deduct contributions up to 50% of your adjusted gross income for the year. So if your adjusted gross income was $100,000, you may be able to deduct $50,000 in charitable donations. However, note that contributions to some organizations require you to apply a lower or higher limit. Also, remember that the total amount of all itemized deductions, including charitable contributions, you can claim is limited based on your filing status and income. One final thing to note is that to write off donations for the current tax year, they have to have been made on or before the last day of the year. If you missed the December deadline for year-end donations for 2017, for example, you might still use these tips to get a head start on planning your charitable contributions and your tax deductions for the next year. So yeah, obviously this article is a bit old because it's talking about 2017. So an important point here is that you can only take these. You can only take it as a deduction if you itemize deductions. And since the tax reforms that were done, I guess, at the end of 2017 that took effect in 2018, the standard deduction has increased significantly. I think it's up to $12,000 now. And if you don't have like a large property tax bill, if you don't have a large mortgage, with a lot of interest that you're writing off on your taxes, it can be hard to get up to $12,000 in write-offs. I mean, obviously if you're donating $12,000 worth of physical goods, then, that can get you up to the point where it makes sense to itemize. But, look at the rules, see what your situation is. Everyone's is different. For me, I think at this point it's hard for me to, I just don't have that many tax write-offs anymore. I'm getting taxed a lot. Cry. All right. And the second thing I want to read is from Goodwill's website itself. And let's make sure you can hear me. Good, the audio has been working. I'm not wasting my time. Yay! Okay. Okay. This is from www.amazinggoodwill.com. IRS guidelines. I read them so you don't have to. If you itemize deductions on your federal tax return, you may be entitled to claim a charitable deduction for your Goodwill donations. According to the Internal Revenue Service, IRS, a taxpayer can deduct the fair market value of clothing, household goods, used furniture, shoes, books, and so forth. Fair market value is the price a willing buyer would pay for them. Value usually depends on the condition of the item. By law, a charity cannot tell you what your donated items are worth. This is something you must do yourself. To assess fair market value for your donations, consult a local tax advisor who should be familiar with market values in your region, or review the following tax guidelines available from the IRS. Determining the value of donated property defines fair market value and helps donors and appraisers determine value of property given to qualified organizations. It also explains what kind of information you must have to support the charitable contribution deduction you claim on your return. Publication 561. To help you determine your donation's fair market value, Goodwill is happy to provide a value guide that offers average prices in our stores for items in good condition. Charitable Contributions explains which organizations are qualified to receive deductible charitable contributions, the types of contributions you can deduct, how much you can deduct, what records to keep, and how to report charitable contributions. Publication 526. I gotta say, do not use Goodwill's value guide. They sell things at whatever the Goodwill market value is, which is not the same as an enthusiastic individual seller market value. Non-cash charitable contributions applies to deduction claims totaling more than $500 for all contributed items. If a donor is claiming over $5,000 in contribution value, there is a section labeled Donee Acknowledgement in Section B, Part 4 of the Internal Revenue Service Form 8283 that must be completed. That's so exciting. The form and instructions are available on the IRS site and can be accessed through this link. And you can search for that, I'm sure. A member of the management staff must verify that the donation receipts match the completed form and fill in the date of donations in this section. In addition, Goodwill's name, Goodwill Retail Services Incorporated, store address, and identification number 3920402239 must be completed. Management staff must also provide their signature, title, and the signature date. Finally, a copy of completed forms 8283 should be forwarded to the merchandise analyst. IRS links for forms and instructions. IRS tax forms. Form 8283 is used to report information about non-cash charitable contributions. Form 8283 or Form 8282 is used to report information to the IRS and donors about dispositions of certain charitable deduction property made within 3 years after the donor contributed the property. Goodwill will be happy to provide a receipt as substantiation for your contribution in good used condition only on the date of the donation. So those are the rules if you want to contribute some stuff at Goodwill. And these are the rules overall if you are looking to write off something on your taxes by donating stuff that you don't use or need this holiday season. Have a fabulous evening.